Hello, and thank you for joining me for a discussion about why the ultra wealthy are estate planning right now. And even if you aren't rich, why you should be looking at doing estate planning too. Developing plans to transfer assets between generations is a crucial financial step for anyone. Wealth management firms and advisors say, especially with the Biden administration, people need to be aware of how and when to begin estate planning, transferring their capital to their heirs. For us at American Wealth Strategists, it's probably the most important thing we do. It is the one thing clients really don't want to talk about. It's a little bit boring. It means they're going to die, and it's planning. They'd rather buy a new home or say, how are we going to invest the money? But legacy planning is truly one of the most important things we do. And it's not just with the wealthy clients. If you have children and you want to leave them anything, it's never too early to start thinking and planning for that. Now, here in the Dallas-Fort Worth area, this is especially an issue. There are a lot of companies and people moving here from higher tax jurisdictions. The way to maximize asset transfer is by finding the first generation's core capital, which is the necessary amount of money that they're going to need for their personal lifetime. After that core capital need is determined, assets, which are oftentimes high growth assets like businesses, are placed into a vehicle to grow outside of the estate. Several factors, including the political shift, current interest rates, and even COVID, have caused an increase in conversations around estate planning. Planning asset transfer generation to generation became even more of a hot button issue due to potential political policy changes. Now, currently, for instance, the estate tax exemption for single people is $11.1 million and double that for married couples, all the way through 2025. However, President Biden's current proposal would bring that number down to about 50%, to around $5 million per person. This means everyone would need to pay estate taxes if they had more than that amount. So this has caused a lot of folks to look at their estate plan and determine whether they've used that lifetime exemption and whether or not to create new entities to fully utilize that tax lifetime exemption should it be cut in 2021. You know, we go through periods around elections when people anticipate tax changes, and it causes a rush to the estate planning attorneys to make changes before the year end. Now, it's really unclear if and when the tax exemption policy would be enacted, and wealth management experts all over the country say it's best to plan ahead in case that change begins in 2021. The interest rate is another factor that increases the incentive to plan wealth transfer now. Today's low interest environment is one of the key reasons to plan that. Low interest rates facilitate a wealth transfer strategy that involves selling a business or part of a business to a trust for their children or heirs, which the trust will pay back over a structured course of time at the applicable federal rate. In that way, a family will not only be growing capital in the trust through a business, but will also be paid back over time, similar to loaning that asset. And you know, COVID has had a slightly impacted the way people think about wealth transfer to younger generations. The pandemic has forced people to confront their own mortality and think about what would happen to their assets in the future. And many adult children are pushing the idea with their wealthy parents. I think COVID has raised the reality that we're mortals, and we never know exactly what lies ahead. The fear of the health scare COVID has brought to our lives has really brought up the need to have a conversation about what would happen. Now, sometimes there's intergenerational disagreement in how assets should be allocated or invested, which doesn't always come down to dollars and cents. When we talk with our clients about keeping a family united in harmony under the guiding values that's important to the first generation, that's when they really light up. That's when they understand, hey, this is going to make a lasting impact on my family. Now, this process involves deciding what the values and mission of a family are, then going through communication and education, and finding a way to transfer those assets. This could entail investments in causes that the family is passionate about or trust funds. If you would like to continue this discussion on a more personal level to see if this type of planning would benefit you and your family, there's a link to book a time for a conversation with me. I encourage you to take the first step because it all begins with a conversation. Pick a time and let's have that conversation now. I encourage you also to take the quiz in the related content section to see if you and your family could benefit from working with a family office. In the recommended content section, there is a document to see if American Wealth Strategist is that family office. Well, again, I want to thank you for watching, and I look forward to talking with you real soon. Thank you.